Here are 3 reasons why to subscribe to Fringe Financials on YouTube. Number 1, it is free, which is the best price that you can pay for this kind of content. 2, I am completely transparent with all of my investments. And number 3, I have a variety of educational videos every single week. Now let's get on with the video. What is up, YouTube, and welcome back to Financial Freedom Friday. Now, this is not your typical Financial Freedom Friday where I will be covering my net worth review. Again, last video, if you watched it, I did say that I have a big announcement coming on Friday, so this is going to be the day that I talk about what I'm doing with my investments moving forward. So this video is going to be a really short video compared to the other ones, so just kind of cover the ideas behind what I'm doing with my investments and the reasons as to why. So if you're excited to see what I am doing, please make sure that you smash the thumbs up button, subscribe to the channel if you have not already done so, and make sure you turn on the bell notifications. So the big announcement that I have is that my dividend portfolio, I have in fact liquidated or sold off almost all of my position. So I had about $30,000, almost $31,000 in my portfolio, and this week was the week that I started selling off a lot of my assets. So right now I'm sitting on about $27,000 in my brokerage account, and I still have a couple positions that I'm holding money in, so it's not quite a $30,000. So the positions I'm still holding is in companies like Apple. I have investments still in Microsoft. I have investments in VTI, which is the Total Market Index Fund. I have a position still in Nvidia, and I have one in McDonald's. Now, these positions I did in fact still hold because I see, a lot of growth in those companies, Microsoft, Apple, Nvidia. The VTI is an ETF that tracks the entire market, so that's always going to be increasing. And McDonald's to still have the dividend. But again, McDonald's isn't going to be going anywhere anytime soon, so I wanted to hold that position. Now, if you're wondering why I went through and sold off a lot of my positions in my account, again, there's a couple of major reasons as to why. First reason that I think was too much for me was that I had a lot of different investments in different stocks and companies, and I feel like it just stretched me out way too much. It became way too much to manage. I had, over 70 positions in different accounts that are paying me dividends and everything. And it just stretched me out to a point where I had to track so many things. It just made it so hard to keep track of every single, news break, every single dividend. Even though the trackers helped out, it just wasn't feasible for me long term. It was really stressing me out a lot. So the first thing was I wanted to downsize my portfolio to having maybe 5, 6, 10, 12 stocks instead of, 70, 80, 90. It was just way too much to handle. The second reason that I sold off a lot of my positions in my brokerage account was that, we're talking about possibly having a new bull market coming into play here. And with the way my portfolio was set up, as someone who's of younger age in investing here, the focus should be on growth, and it's taken me a while to really start to think about growth stocks and investing in companies that will do good in the long term and have more potential to give me more returns instead of investing in those stable companies. The stable companies usually become investments for people that are getting closer to retirement. Maybe they're 30, 40, 50. I know there are some people out there who are watching this that are dividend investors at younger ages, and I applaud you and I love doing it. Don't think I hated it. But for me, I'm switching up my strategy and going more towards that growth stock investment side instead. Now, that does not mean that I am not a dividend, investor still. Again, I'm going to be holding McDonald's still. So I'm still going to be getting dividends in like McDonald's, Apple, Microsoft, and those kind of dividend stocks. But I want to take my focus now and move it towards growth stocks because my portfolio right now, when the market goes down bad, my portfolio does pretty well still. It holds up really nicely because they're stable companies. But when SPY and the NASDAQ and the returns are 15, 20%, over this year specifically or in the next couple of years, my portfolio averages about like 7 or 8%. So I'm not gaining those returns as much when the market goes up, but I'm not losing as much as the market goes down. And in the history of the stock market, it goes up more than it comes down. So I'm starting to reallocate my investments and my cash into more growth stock investments. I do have some strategies I will be doing with trading stocks and looking at different options where I can still have that passive income that I love to have, but with stocks that I'm going to be owning for the long term. So I'll get into that in a different video. Now, that does not mean that my other investments are being sold off. I'm still going to have the same, retirement account, the same health and savings account, the same, Webull account. Those accounts are all the same. I'm just liquidating my dividend portfolio and switching up the strategy here. Now, the reason why I did it was that a lot of the stocks that I owned, I was selling off for a loss. And that means that, my taxable return is going to be a little bit lower. It's going to be tax loss harvested because I sold off a lot of stocks that were at lows. Like AT&T was down a couple $100. Verizon was down a couple $100. So that's going to offset not only my dividend payouts for tax season, but even the gains I sold off for is going to offset that as well a little bit. And it's also going to be long-term capital gains tax if I still end up being positive with my sales. So it's not the worst thing. They're not short-term investments. They were long-term ones I've held for a couple of years. So, I'll take the taxes on that if I had money gained. If the losses offset the gains, then even better. So I don't have to worry about taxes as much. So that is the goal as to what we'll be doing for next week and the next, foreseeable future, looking at those kind of growth stocks and switching the strategy up a little bit. And again, it's something to try. Again, I'm only 27 right now, so it's something to really try out at the younger age because you can take on a lot more risk when you're younger because you have years and years of investments ahead of you. So that is it. Again, the big announcement, I sold off a lot of my dividend portfolio position. I don't have that much left in terms of holding stocks. I have a lot of cash right now, and I'm going to show you next week as to what I will be doing with my investments. Thank you so much for watching. Just so you know, next Monday, I don't have a calendar right now, but I will be covering on Monday. I'll still do a dividend battle. I thought that was really awesome and people enjoyed that one. Wednesday, I'll be kind of showing you what I'm going to do and how I can use my cash and my investments. And then on Friday, I will be back with a net worth review. The net worth is going to be a little bit difficult because I sold some positions, but I'll be sitting through and figuring that out so you guys get the most accurate information possible. Thank you so much for watching. I hope you guys have a great weekend. And again, if you have made it this far in the video, do not forget to like the video and subscribe to the channel. Have a great weekend, everybody, and we'll see you all on Monday.